Bitcoin, a pioneering cryptocurrency, is a decentralized digital currency operating independently of central authorities like governments and banks. It functions as digital cash, facilitating transactions for goods and services or exchanging for other currencies. Key features include decentralization through a peer-to-peer network and blockchain technology, high security via cryptography, and a limited supply of 21 million coins to curb inflation. However, it's characterized by price volatility, is not legal tender in any country, and is linked to concerns over its environmental impact due to energy-intensive mining. Despite its growing use in transactions and international money transfers, Bitcoin remains a new, complex technology with associated risks like regulatory uncertainty and potential for fraud. Bitcoin is the first and most well-known cryptocurrency, a digital currency designed to work as a medium of exchange outside the control of any central authority, like a government or bank. It's essentially a form of digital cash that you can use to buy goods and services, or trade for other currencies. Here are some key points about Bitcoin. Decentralized, Bitcoin isn't controlled by any one person or entity. Instead, it's based on a peer-to-peer network, where computers all over the world work together to verify and record transactions on a public ledger called the blockchain. This makes it resistant to fraud and censorship. Secure, Bitcoin transactions are protected by cryptography, making them very difficult to hack or counterfeit. Limited supply, there will only ever be 21 million Bitcoins in existence, which helps to control inflation. Volatile, Bitcoin's price is highly volatile, meaning it can fluctuate significantly in value over short periods of time. Bitcoin can be used to buy a variety of goods and services online, and some physical stores are starting to accept it as well. You can also use it to send and receive money internationally. However, it's important to remember that Bitcoin is still a relatively new technology, and there are some risks involved in using it. For example, the market is not regulated, so there is no guarantee of consumer protection. You should also be aware of the potential for scams and fraud. Here are some additional things to keep in mind about Bitcoin. It is not legal tender in any country, but it is recognized as a cryptocurrency by some governments. It can be used to make anonymous transactions, which has attracted some criminals. It is a very energy-intensive currency to mine, which has raised concerns about its environmental impact. Overall, Bitcoin is a complex and rapidly evolving technology. It has the potential to revolutionize the way we think about money, but it's important to be aware of the risks involved before you invest in it. The usefulness of Bitcoin is a debated topic, with its proponents highlighting its potential advantages and its detractors emphasizing the risks and limitations. Here's a breakdown of both sides. Potential advantages. Decentralization, Bitcoin removes the need for intermediaries like banks, potentially offering faster, cheaper, and more secure transactions, especially for cross-border payments. Transparency, all Bitcoin transactions are recorded on a public ledger, blockchain, ensuring transparency and reducing fraud. Censorship resistance, no single entity can control Bitcoin, making it difficult for governments or institutions to block transactions. Scarcity, with a limited supply of 21 million Bitcoins, the currency is inherently deflationary, potentially protecting against inflation. Investment potential, Bitcoin's price has historically been volatile, but some see it as a high-risk, high-reward investment opportunity. Limitations and risks. Volatility, Bitcoin's price fluctuates significantly, making it a risky investment and potentially unsuitable for day-to-day transactions. Technical complexity, using Bitcoin can be technically challenging for less tech-savvy individuals, limiting its widespread adoption. Energy consumption, mining Bitcoin consumes a significant amount of energy, raising environmental concerns. Criminal activity, Bitcoin's anonymity has attracted individuals for illegal activities like money laundering and cybercrime. Regulatory uncertainty, governments are still grappling with how to regulate Bitcoin, creating uncertainty for its future. Ultimately, whether Bitcoin is useful depends on your individual needs and priorities. For some, its potential benefits outweigh the risks. For others, the limitations and uncertainties make it an unattractive option. Here are some additional points to consider. Bitcoin adoption as a payment method is still limited, though growing. Many businesses and individuals are hesitant to accept Bitcoin due to its volatility. Alternative cryptocurrencies with potentially improved features are emerging. It's important to do your own research and carefully weigh the pros and cons before deciding if Bitcoin is a valuable tool for you. Here's a breakdown of how Bitcoin works. The building blocks. Blockchain. Imagine a giant, publicly viewable ledger where every Bitcoin transaction is ever recorded in chronological order. This ledger is called the blockchain, and it's the backbone of Bitcoin. Think of it as a chain of blocks, where each block contains a batch of verified transactions. Miners. These are specialized computers that solve complex mathematical puzzles to verify and add new blocks to the blockchain. As a reward for their work, miners receive newly minted Bitcoins. This process is called mining. Making a transaction. Wallets. When you own Bitcoin, you store it in a digital wallet. Think of it as a secure vault for your digital currency. There are different types of wallets, such as software wallets on your phone or hardware wallets that look like USB drives. Keys. Each wallet has two unique keys, a public key, like your bank account number, and a private key, like your PIN. You share your public key with others to receive Bitcoins, but you keep your private key secret for spending your Bitcoins. Sending Bitcoins. Initiating a transaction. When you want to send Bitcoins to someone, you use your wallet to sign a digital message with your private key. This message essentially says, I, the owner of this private key, authorize the transfer of X Bitcoins to recipient's public key. Broadcasting the transaction. Your signed message is then broadcast to the entire Bitcoin network. Mining and verification. Miners pick up the transaction and try to solve the complex puzzle to add it to the blockchain. The first miner to solve the puzzle gets to add the block, including your transaction, to the chain and receives a reward in Bitcoins. Confirmation. Once a block is added to the blockchain, the transaction is considered verified and irreversible. It typically takes 10 to 20 minutes for a transaction to receive enough confirmations to be considered secure. Security and transparency. Cryptography. All Bitcoin transactions are encrypted using strong cryptography, making it extremely difficult to hack or counterfeit Bitcoins. Transparency. Anyone can view the entire blockchain, making all transactions publicly verifiable. This transparency helps to prevent fraud and builds trust in the system. Limitations and risks. Volatility. Bitcoin's price can fluctuate significantly, making it a risky investment. Technical complexity. Using Bitcoin can be technically challenging for beginners. Energy consumption. Mining Bitcoin consumes a lot of energy, raising environmental concerns. Regulatory uncertainty. Governments are still figuring out how to regulate Bitcoin, creating uncertainty for its future. The identity of the creator, of Bitcoin remains one of the biggest mysteries in the financial world. The only known name associated with it is Satoshi Nakamoto, which is widely believed to be a pseudonym. Here's a breakdown of the key figures involved. Satoshi Nakamoto introduced Bitcoin through a white paper published in 2008 and initially developed the Bitcoin code base. Remained active in the community until late 2010 and then disappeared without a trace. Considered a legendary figure in the cryptocurrency world, celebrated for their revolutionary invention. Despite numerous investigations and speculation, their true identity remains unknown. Individuals speculatively connected to Satoshi Nakamoto. Dorian Nakamoto, a California man with the same name, although he has repeatedly denied any involvement in Bitcoin. Nick Szabo, a legal scholar and computer scientist considered by some to be the most likely candidate based on his writings and expertise in digital currencies. Craig Wright, an Australian entrepreneur who has claimed to be Satoshi Nakamoto, but his claims have been widely disputed and lack convincing evidence. Other people behind Bitcoin. Early adopters and developers. These are the individuals who contributed to the early development of Bitcoin and its ecosystem, building wallets, exchanges, and other infrastructure. Miners. The individuals or organizations who contribute computing power to the Bitcoin network by solving the complex puzzles for block validation. Community members and influencers. Bitcoin has a large and active online community, where individuals contribute to discussions, news, and education about the cryptocurrency. While the identity of Satoshi Nakamoto remains a mystery, it's crucial to acknowledge the collective efforts of numerous individuals and communities that shaped and continue to shape the trajectory of Bitcoin and the broader cryptocurrency landscape. Remember, it's important to approach any claims about Satoshi Nakamoto's identity with a critical eye. There is no definitive proof, and many claims lack substantial evidence. Focus on understanding the technology and its implications rather than obsessing over the creator's identity. I did a quick search for more information and here's what I found. Over the past year, Bitcoin has experienced significant volatility and notable developments. Here are some key highlights. Price fluctuations. Bitcoin experienced a roller coaster in terms of price. It briefly surpassed $42,000, reaching a 20-month high, driven by expectations of U.S. interest rate cuts. However, it also witnessed a steep intraday drop of 7.5% in December 2023, marking its steepest drop since mid-August. Regulatory developments and market dynamics. The regulatory environment in the U.S. showed signs of easing. For example, Binance agreed to pay a $4.3 billion fine to U.S. authorities, which was seen as a positive development in the regulatory space. Macroeconomic forecasts, such as high interest rates and inflation concerns, also influenced Bitcoin's performance. Lower interest rates tend to be favorable for Bitcoin as they make safer investments like government bonds less attractive, pushing capital towards riskier asset classes like cryptocurrencies. Flash crash analysis. The flash crash in Bitcoin's price was attributed to several factors, including macroeconomic forces, such as a stronger-than-expected jobs report and forecasts of the Federal Reserve aiming to cut rates in 2024. There was also speculation about over-leveraged traders in the crypto market, contributing to the rapid price drop. Bitcoin as a safe haven. Throughout 2023, Bitcoin was increasingly seen as a safe haven amid global financial turmoil. This perspective was bolstered by events like the U.S. regional banking crisis, the Chinese shadow banking system crisis, and the surging bond yields, which led to concerns about the health of the U.S. banking system. Potential spot ETF approval and Wall Street's role. There was significant excitement over the potential approval of a spot Bitcoin ETF. Major financial institutions like BlackRock, Fidelity, and Franklin Templeton showed interest in listing Bitcoin ETFs in the U.S. The possibility of regulatory approval for these ETFs was seen as a potential driver for a sustainable rally in Bitcoin's price. Recent price surge in retail demand. Despite a downturn where Bitcoin sank toward $15,000 after FTX's collapse, it rebounded throughout 2023. By mid-October, Bitcoin was around $27,000, and it later surged, briefly touching $45,000, fueled by optimism over Bitcoin ETFs and sinking interest rates. The increased retail demand for Bitcoin was also attributed to the upcoming halving event, scheduled for April 2024. This summary presents a nuanced picture of Bitcoin's journey over the past year, highlighting the interplay of regulatory developments, macroeconomic factors, institutional interest, and market dynamics in shaping its trajectory. Refuting the points made about Bitcoin. Decentralized nature. While it's true that Bitcoin operates on a decentralized network, this doesn't fully insulate it from influence or control. Large mining pools and entities hold significant power in the network, potentially impacting decisions related to the protocol or transaction processing. Security. Although Bitcoin transactions are secure due to cryptography, the broader ecosystem has vulnerabilities. Exchanges and wallets have been hacked, leading to substantial losses. Furthermore, Bitcoin's security depends heavily on private key management, which, if mishandled, can lead to irretrievable loss of funds. Limited supply and inflation control. The fixed supply of 21 million Bitcoins is a theoretical safeguard against inflation. However, Bitcoin's value doesn't solely depend on its scarcity but is also influenced by market demand, technological developments, and regulatory changes. Therefore, its ability to combat inflation isn't guaranteed. Volatility. Bitcoin's volatility is often cited as a drawback for its use as a stable medium of exchange. This volatility can undermine its effectiveness as a store of value, making it challenging for users to predict its worth in the future. Use in transactions. While Bitcoin is accepted by some vendors, its widespread adoption as a means of payment is limited. Many businesses are hesitant to accept Bitcoin due to its price volatility and the complexity involved in processing and converting it into fiat currency. Newness and regulatory risks. Bitcoin's relatively short history means it is still subject to significant regulatory risks. Governments around the world are grappling with how to regulate cryptocurrencies, leading to potential future restrictions or changes in how Bitcoin is used and traded. Legal tender status and anonymity. Bitcoin is not recognized as legal tender in most countries. Its potential for anonymity has been somewhat overstated, as transactions are traceable on the blockchain. This transparency can compromise privacy and has led to the tracing of illicit activities. Environmental concerns. The energy consumption of Bitcoin mining is significant and has raised environmental concerns. The proof-of-work mechanism, which secures the Bitcoin network, requires vast amounts of electrical power, contributing to carbon emissions. Adoption and competition. The growing number of alternative cryptocurrencies offers different features and improvements over Bitcoin, such as faster transaction times or lower fees. This competition could potentially limit Bitcoin's growth and acceptance. Technical challenges. Bitcoin's technological complexity can be a barrier to entry for average users. Understanding how to securely store, transact, and manage Bitcoin requires a level of technical knowledge that many potential users may not possess. These points highlight the complexities and challenges associated with Bitcoin, suggesting that while it has unique features and potential, it is not without significant limitations and risks. In conclusion, Bitcoin stands as a groundbreaking yet contentious innovation in the financial world. Its decentralized nature, powered by blockchain technology, offers a level of security, transparency, and resistance to censorship unparalleled by traditional currencies. The fixed supply of 21 million coins adds a unique aspect to its economic model, potentially safeguarding against inflation. However, Bitcoin's journey is marred by significant challenges, including its notorious price volatility, the environmental impact of its mining process, and the ongoing uncertainty in regulatory landscapes. While it has made strides in becoming a medium for transactions and international transfers, Bitcoin still faces hurdles in widespread adoption due to its complexity, risks of fraud, and the evolving competition from other cryptocurrencies. Ultimately, Bitcoin's future hinges on balancing its innovative features with the practicalities of security, usability, and environmental sustainability, making it a fascinating, albeit complex, facet of the modern financial ecosystem.